Hello, I'm Sam Meredith, and joining me to discuss the financial markets for the week ahead is Jarratt Davis, Head of Trading with Smile Global Management. Eurozone finance ministers meet on Friday, April 24th in Riga, with plenty of scepticism surrounding Greece's ability to meet its ongoing deadlines. How do you see this playing out, and what impact could they have on sentiment at this stage?
Well, we believe that the situation with Greece will ultimately be resolved. There's going to be a lot of bartering, there's going to be a lot of propaganda, if you will, each side saying different things to try and get more leverage for their argument. But ultimately, I think it would kind of be a situation where there'd be like an 11-hour deal. We don't foresee Greece leaving, and I think ultimately a deal will be done.
Sticking with the Eurozone, economic sentiment for Germany is due to be announced tomorrow with a medium-term forecast of their economic situation. What are you expecting from this data, and how significant could this be moving forwards?
Well, for the view, obviously this is a gauge of institutional sentiment. So we expect this to improve with everything the ECB are doing. The markets, professional traders have generally taken this as a quite a positive step from the ECB. So we're kind of expecting this kind of indicator to be constantly improving. However, we have that general expectation anyway from European data because of the impact of that QE. But I don't expect this to have any kind of significant impact in terms of causing a rally or an increase in the value of the euro. That pair or the currency is still going to be dictated major reactions in the market from it at this time.
Lastly for today, what is it in particular that you'll be looking out for this week? Are there any surprises in store for us to keep our eyes on?
Yeah, we're looking at one particular figure we're looking at is the Australian CPI figure coming on Wednesday. We've had some recent reports from Governor Stevens on the other day. Basically said he's pretty dovish, basically saying that they are prepared to cut again if they need to. They've shown clear willingness to do that, and that policy needs to be accommodative for the foreseeable future. So, particularly with the recent value we've had on the Australian dollar, US dollar, we actually expect CPI is expected to come in slightly worse than it was previously. So actually we're looking for pressure on the other dollar. We're looking for downward pressure into the CPI figure. And if it does come out worse, or even worse than expected, we actually could see that pressure last into next month's RBA rate statement. But a lot of kind of speculation about whether or not they'll cut their rate again.
Thank you, Jarratt. For more updates and to see how the markets react, keep informed by clicking back to Dukascopy throughout the week. Goodbye for now.